every investor that I have met has had some pretty big losses. And whether it be AT&T, whether it be Disney, or whether it be Target, every investor has a company that they're really deep on. And with companies left and right dropping 40 and 50% over the last 3 years, today I thought it would be a fitting topic to talk about how deep is too deep when buying a company. So today I'll be talking about a few companies in my personal portfolio right now that I'm very deep on and my plan with them and my investment thesis overall, and it's updated. And I'm going to be completely transparent here of what I've messed up on potentially in these stocks. And before the video starts, I typically ask for you to subscribe, which is of course the case in this one, but I'm trying to build a very transparent community here. In the comment section, post the stock that you currently are holding that you are most deep on or is your biggest loser, but you're staying invested and continue buying. I have a few, but for me, the big one is Target right now, which I'll talk a lot about in the video. With all that out of the way, roll the intro.
I like money.
Alright, I like to make things as entertaining and humorous for you guys as possible, so today we're going to be talking about being pregnant on stocks. And by being pregnant, I mean being deep, and by being deep on stocks, I mean being deep in the red. Being deep in the red is never a situation that you want to be in, and it's usually a situation that's probably out of your control. You rather messed up on your investment thesis one way or another, you straight up timed the market wrong, which you obviously can't control. Something unpredictable could have happened to the company that you couldn't possibly envision in any possible galaxy, i.e. Disney, or you just bought in at a horrible time, as I mentioned. There's multiple reasons you could be deep on a company. So before I talk about some of the companies that I'm currently deep in the red on and my plan with them, I'm going to just talk about being pregnant overall with stocks. Start off, how do we know we are being pregnant? To start off, if you're deep on a stock, you're most likely getting a lot of criticism or backlash from other investors for investing in it in the first place. I.e., if I were to buy Target, everybody in the Discord would be lighting me up, as it has happened in the last few weeks. Being deep on a company you typically could have bought in when you initially started investing. For example, me with Disney, you could have bought companies when you really didn't understand much about valuation. That happened to me as well. Another huge thing here with being deep is you don't completely support your initial investment thesis, or sometimes you do, but you just don't ideally want to add to the stock overall, but you could see it potentially rebounding over the long term. That's definitely how I personally am with Disney. Disney has amazing brands in my opinion, and they could have a moat, some could say, but at the same time, Disney's doing a lot of things that I don't particularly agree with right now from a business perspective, so I don't feel the need to buy, but I could see the stock going up over the long term. The same goes with me with like a company like 3M. 3M's obviously a giant of a business overall, and if you look at the revenue, that really reflects on it, but at the same time, there are a lot of bad things going on. You don't particularly want to add any more to the position, whether because your investing goals changed, but you don't want to sell out of the company at a giant loss because you think there's potential for them in the future. And I mean, this is a very awkward spot for a lot of investors to be in. So if you refer to me as talking about going deep in a stock, that's kind of what I mean. You're in the awkward situation that you don't want to sell it. You see the potential of it potentially going up in the future. You still like some things about the company, but you're not too enthusiastic to add, or you see some other opportunities. There are a lot of companies like this for me: Coca-Cola, Johnson & Johnson, Disney, Target, and I'll talk about a whole lot more today. So what is our plan B, so to say, on the topic of pregnancy? When do we know whether to sell or buy the stock? Well, obviously, it varies from company to company, but I would just say, generally, stick to your investment thesis, look back and see if your investment thesis can still be applied today. And when I'm talking about investment thesis, I mean a long-term investment thesis, 20, 30 years. My situation is different from yours, but when I started buying Target, I thought they'd be a retailer that would continue to grow as the American economy grew. They'd grow their dividend, do share buybacks, and all that good stuff, and they'd overall grow as a business over the next 20 to 30 years. I still believe that to this day. But if you're deep on a company and you initially don't really know why you bought the company in the first place, or something crazy changed fundamentally with the business itself, they did some crazy restructuring, you don't like the new CEO, they're going into a new business overall, then I think it's appropriate to sell. I also think it is really important to look at opportunity cost as well. There are a lot of companies that if I were to sell out at a potential big loss, that if I could potentially re-exit my position into there, where I could make up that return over 20, 30 years, the same time horizon, and that I have a stronger investment thesis on, I think opportunity cost is a big thing as well. And lastly, potential of them recovering and looking at their assets overall. A lot of companies that are in a crazy dip have some insane assets. Look at Disney and 3M, for example. There are just some instances where the complete fluke thing happens, or the worst case scenario occurs, and the stock just just crashes. Sometimes it happens, that's investing for you guys. But is there a potential that Disney, with the brands they have, starts producing some really good quality content with the brands and iconic franchises they own? Absolutely. And that's one of the huge reasons I'm still holding on. And that goes for all the businesses that I'm deep in on right now. Alright, you guys already know on this channel I believe in full transparency, showing my good investments and the bad, what I messed up on, what my future plans are, and it's overall a great way to look back and document. This is why I love doing the portfolio updates, one coming Saturday by the way. So I'm going to be sharing a few companies that I'm currently deep on right now, my future plans with them, my original investment thesis, and what's really happened over the years to be in the situations that they're in. And of course we need to start with Disney, stock ticker DIS. With Disney, the unthinkable happened with them. Initially, I bought Disney, as many newer investors do, assuming that they would continue growing their business, produce blockbuster films with the awesome assets and brands and the iconic franchises that they obtain, grow their parks, cruises, streaming service, etc. And overall, Disney was one of those companies where you couldn't think in a million galaxies you can go wrong with buying. Well, the unthinkable and unpredictable happened, as it typically does in investing, and Disney has now crashed, and I'm down 43.18% of my Disney stock. Where did I mess up on Disney? To start off, I didn't understand valuation at all when I began buying. This is one of the first stocks that I ever bought in my portfolio, and I really didn't look at anything when it came to valuation besides the price history chart. Over the years, Disney has not become profitable on streaming yet. They've suspended their dividend. They let the pandemic impact them way more than they should have. They're getting too involved in politics, and some would even say they've gone woke. With Disney, it's one of those companies where at this point, I'm just numb to the losses. So right now with my Disney, I'm holding my eyes and praying. I do believe, though, with the assets and brand value that they have, they can recover and hopefully become a giant of a company one day. With that said, though, there are so many risks with the company, and with some of the content that they've been producing recently, I'm not too confident. So I mean, with my Disney right now, I'm holding on to it, praying. That dividend is apparently coming back at the end of the year, even though they haven't reinstated it yet, so that'll be very interesting to see. But as I mentioned, and I've talked about earlier in the video, Disney is definitely one of those companies with the brands that they have. There's definitely a real chance that they could recover. Alright, I'll just be transparent here, and I am technically deep on this company, even though I do think it is a really wonderful business, and nothing has changed whatsoever with my thesis on it. It's Nike, stock ticker NKE. With Nike, the only reason I messed up here, I didn't understand anything about valuation, and I literally bought it one of the top points of the company. That said, though, they have amazing brand value, amazing financials, free cash flow, share buybacks, dividend growth, and so much more. I've been adding to Nike recently too, but you'll have to see in the portfolio update Saturday how much I bought. Alright, next we have another company like earlier that I mentioned, which is 3M, and basically 3M, they're kind of like Disney. The worst possible case scenarios happen with them. They're losing a lot of money right now based on lawsuits, and in the short to medium term, there's a lot of risk with this company. With that said, though, looking at 3M's revenue, their business overall hasn't changed whatsoever, and they're actually performing fine when it comes to the revenue. With that said, though, a lot of their profits are being eaten away by lawsuits and all that. So right now, I'm not particularly loving looking at this stock with my own capital to buy, but I am reinvesting my dividends. With 3M, I'm definitely not selling. It would be immature for me as an investor to sell a complete low point like this, and I do believe with 3M's business overall, over the long term, very long term, they'll recover. 3M is literally everywhere in society. You're never 10 feet away from a 3M product. So right now, I'm just reinvesting my dividends with them. This is a much bigger loss in my portfolio, as I am down 40% right now. But my original investment thesis for the actual business itself pretty much remains the same. That said, though, a lot of their profits are being eaten away by lawsuits. Next, of course, we got Target, and for my Target right now, I'm down 29.61%. It seems every day this week, I'll log on to dividenddata.com in school, which isn't blocked by my school Chromebooks, which is the sponsor of today's video, by the way. But every day I log on, it just seems like Target is dipping 2 or 3%. I truly don't know when the bottom's going to be, guys, but I have remained strong with my original investment thesis on this company. No matter what the price does, I'll continue buying. My thesis on Target has not changed since the day that I bought it $220, since the day I bought it $150, since the day it was trading at $250, so on and so on. You get my point. My long-term investment thesis on Target has not changed whatsoever. It is not the best company of all the retailers. It is not the best company in the market. But at these prices, I believe I will get a very solid total return over the long term. Target, I think, will also be fine as a business. So with Target, I am being patient with my buying, but I am definitely averaging down day by day, brick by brick. My original investment thesis on Target has not changed whatsoever by the short-term price movements in the company. Alright, and lastly we got Realty Income, stock ticker O, and with Realty Income it's not the deepest position that I am, but I am still in the red with it. I'm down 21.03%. With Realty Income I'm also averaging down. I pretty much bought in the 60, 65s range, and I've just been pretty much dollar cost averaging and reinvest my dividends since. I have bought a little bit this week, but if you want to see all my buys and sells, you have to wait for the portfolio update coming this Saturday. I really appreciate it if you made it to the end of the video. If you appreciate the transparency, let me know in the comments section. I always love hearing your thoughts, comments, opinions. We also have a stock market competition for members only, so if you're interested in that, the winner gets a $25 Starbucks or Target gift card. Check that out. Become a member today. I'll post any updates and membership. Thank you. Subscribe. Thank you for 1,400 subscribers. Also, it really means a lot. And of course, do dividends, stocks, not drugs. Have a good one.